everybody, this is John. Welcome to the free video. Let's take a look at a couple of things here. So Chipotle's. Chipotle's here has a weekly squeeze. We've had a nice move here, and we're getting some consolidation right up here around 718. That makes sense. You can see the pop here and consolidation. I'm expecting a further move next week. Okay. One question on how do you play something like that, especially something like Chipotle's that has a very wide spread. And I'll grab my Chipotle's chart here. So what we did with this one was a diagonal, meaning that bought the $700 call, got a 39-minute squeeze, paid $13.59 for it. To offset that a little bit, sold the 715 call that expired this week. Sold that for $1.32. Now the goal was, in a perfect world, this would close around $714. The 715 call would expire worthless, and we would collect that premium. Okay, and this $381 essentially would be applied towards this purchase price. And then next week on Monday, we can reload and turn it into a vertical. Okay, so this started off as a diagonal. We turned it into a vertical. Now, at one point today, Chipotle's was as high as 720. And so you might think, well, gosh, isn't that dangerous if you're doing something like this? Because if it goes to 720, don't you have exposure? And no, what happens if it goes through the 715 call level, you've just maxed out your profit. So you just put a cap on your profit, but at the same time, you're limiting risk because you're reducing your overall cost, and you're kind of turning this into a rental property, okay, which is pretty awesome. Now, you'll notice on something like the spiders, we don't really have any squeezes or anything setting up. And in fact, you know, we're still in a downtrend here. In fact, let me bring up the Qs here and see where we are on that. Yeah, so believe it or not, even though we've had a really good run this week, we're still in a daily downtrend within the context of a weekly uptrend. And so the question becomes, and I guess the biggest question that I'm hearing from people is, okay, so how bullish do we get here? How bearish do we get? And what's the market going to do? But at the end of the day, it's not really as critical as you might think, because the question always comes up. It's like, okay, do you want to be right on market direction, or do you want to be right, or make decisions in such a way to promote consistency in your results? And sometimes being right can cost a lot of money, meaning that, if you were really bullish here and you bought a lot of stocks and you've just tried to hold on through this, you've gone through a lot of psychological pain and suffering and maybe got stopped out of stuff. That's fighting to be right. Consistency is you don't really care. You're just setting up trades in such a way as to reduce risk as much as possible, increase profitability and the chance to make a profit, with the idea of creating a consistent equity curve, right? And that's more and more in the room how you're seeing me structure my trades. So in terms of consistency, this is what I'm talking about. We've had a fairly volatile market in 2015, but my number one goal has been, and I've been explaining this in the room, is consistency. So I've been setting up my trades differently. And what I did is I set up an account, a specific account just for the trading room and the silver portfolio, with the main goal being consistency, with the goal of making an average of 2.3% per week, which is about 120% a year, okay? Started off, I think, with $158,000. It'll show it here, but you can see. So here's my current portfolio: CMG, $690, FireEye, $775. Starbucks had a good trade on that. But each of these positions is constructed in such a way as it's constructed not only in the way it's constructed, but also with position size. With the number one goal is consistency. Okay, it doesn't mean shunning risk, and it doesn't mean going delta neutral and not making any money. It just means the goal is consistency. So FireEye, 21 days out, or 28 days out. Okay, our goal is consistency there, right? Google here, we did some positions on, more put spreads. Netflix had a lot of positions on that today. That was a lot of fun. Starbucks did an earnings play, but again, we set this up with consistency in mind, a very specific strategy. And starting off with like $158,000, now we're at $188,000, profits of $31,000. So we're exceeding the 2.3% per week goal at this point. So this is, to me, this is kind of the essence, at least what I've heard from people. It's like, yeah, you know what, at the end of the day, I want a reliable source of income. And the only way to do that is to trade with a mindset and with a specific strategy of consistency. And that's different than, trying to make a lot of money. It's a completely different mindset. And if you're trading trying to make a lot of money, you're automatically wiring your brain to lose. And I know that sounds crazy, but after doing this for a long time, that's what happens when you have that mindset. And of course, you're not going into trading with it, when you're going into trading, you want to make money. But if that's your main mindset, you're not going to make any money. Okay, so the question is how do you do this? So I'm going to do a little bit of different kind of webinar coming up on Tuesday, January 27th. Free webinar, 8 o'clock East Coast time. Of course, that's 7 o'clock Central time. And I'm going to be talking about how to become a consistent trader, okay? And I don't mean, this is not something like, it almost sounds like a bland topic, right? I don't mean to, underestimate the importance of this, but it was interesting. At the end of the year, we did a survey, and like literally 87% of our clients said, you know what, I just want to learn how to be consistent. I make a lot of money, I lose a lot of money. At the end of the day, I want an equity curve that looks like this, not like that, okay? Or not like that, of course. So how do you make consistent money with the occasional home run and be consistent? That's what I'm going to talk about. So why most traders have a short-lived career. So what you can do about that. How you can learn to create steady winning trades from your trading account so your confidence stays high. How to avoid the wild swings in your account. Avoid the sucker bets. And how market makers trick traders and cause them to lose money and really just playing their own game, and why consistency is the only way to turn a small account into a big account. Okay. And the biggest thing with this is that what I always found is that you're going to hear a lot of psychological tips and tricks for trading. But what I found for a lot of people is that even if you know the psychological tips and tricks, you still need the specific strategies, okay, to get the results you want. So you can have all the sayings and the axioms and the post-it notes on your computer to have a specific mindset, but if you don't have the specific strategies to do it, it ain't going to happen. So that's what I'm going to talk about. All right, you'll see a link in the email to register, or it'll pop up after this, and looking forward to talking to you on Tuesday.